DavidFSwensen, Unconventional Success, A Fundamental Approach to Personal Investment. Are you ready to debunk common myths about personal investing and uncover the road to steady wealth building? Dive into the summary of Unconventional Success, A Fundamental Approach to Personal Investment by DavidFSwensen. In this book, Swensen distilled his extensive knowledge of finance to provide eye-opening insights that challenge conventional wisdom. Step away from stock picking, market timing, and sensational tips. Turn towards the basics of smart, steady, conservative investing through well-managed, diversified portfolios. Discover the advantages of tax-friendly channels and the importance of devising a deliberate plan. Swensen's expert guidance will reshape your mindset about investing and help you chart the path to long-term financial prosperity.
Building wealth through wise investment. Making smart investments is key to building wealth over time. Uninformed investors often make major mistakes, such as trying to beat the stock market and picking individual stocks to build their portfolios. However, such methods usually result in losses. Instead, investors should create a well-diversified, passively managed portfolio that includes stocks, realty securities, and treasury bonds. Dollar-cost averaging and knowing one's risk tolerance are important factors to consider, along with avoiding non-core assets and employing a strategy that combines both science and art. By embracing these principles, investors can achieve long-term gains and ensure long-term financial security. Rebalancing your portfolio. Allocating your assets to create a balanced portfolio is just the beginning. Rebalancing your portfolio regularly is crucial to maintaining your planned risk and return profile. Although it may seem counterintuitive, disciplined rebalancers sell high and buy low. The mutual fund industry can be detrimental to investors, but by rebalancing with consistency, you will be better positioned for the future. Yale University's investment staff rebalances daily to maximize profits in the short term while still hitting long-term policy targets. Rebalancing your portfolio takes courage during tough times, but discipline ultimately pays off in the end. Unconventional investing methods. The traditional ways of investing through stockbrokers or underperforming mutual funds are not guaranteed to succeed in the long term. The government needs to intervene in the mutual fund industry's exploitation of investors. Many investors are still stuck in the win-win myth peddled by Wall Street stockbrokers, but studies show that mutual funds often fail to deliver on promises. Meanwhile, increasing individual employee-directed retirement programs are threatening the retirement security of millions of Americans. The Bush administration proposed privatizing Social Security, which could have resulted in high-risk, low-profit ventures for retirement savings. Wall Street is full of investment alternatives, some of which are solid, but investors must be cautious of charlatans. Financial theories indicate that the stock market is a zero-sum game, and active management mutual funds often result in a performance drop after fees and expenses. As an alternative, investors should consider unconventional methods, such as easily available, low-cost, non-profit index funds that mimic the performance of the stock market as a whole. Non-profit index funds. Non-profit index funds are a smart choice for long-term investors to achieve their retirement goals by eliminating the risk of constant trading. Vanguard and TACREF are two large not-for-profit institutions that offer efficient and cost-effective index funds. Vanguard's fees are as low as $100 for a $10,000 account, while Morgan Stanley's index funds range from $800 to $900. TIACREF requires a $5,000 account and is geared towards academics, while the Vanguard Index Fund is open to the public and has no account limits. Vanguard is known to be among the most efficient with low operational costs and in-house investment management, making its combination of indexing, nonprofit status, and mimicking the S&P 500 index distinct. By choosing a not-for-profit investment medium such as Vanguard or TACREF, investors can increase their chances of success and bypass profit-motivated media in the crowded industry.
In conclusion, Unconventional Success takes you on a journey to achieving long-term financial security through a steady and conservative investing approach. By shedding light on the fallacies propagated by active management, mutual funds, and the elusive quest to beat the market, Swensen emphasizes the enduring values of diversification, risk tolerance, and discipline. Building a well-structured portfolio with a thoughtful allocation of assets, savvy investors can leverage the strengths of passive management, low-cost index funds, and effective rebalancing strategies to attain success. So, think like a contrarian, embrace unconventional success, and embark on the path toward financial stability and a secure retirement.